right, good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back, and we're here to get started our morning analysis. So let's go ahead and start getting through this euro dollar, and we're going to start there. You know, like I mentioned to you guys before, I think I'm done with the euro. I don't really feel the desire to trade it at this point. I want to get past the next couple of days. It's going to be whippy. You know, maybe there's some moves that would provoke me into trading the euro at this point. Maybe a move back up towards resistance, up to 114 might get me in. Maybe trading it down here if it gets to 110 might get me in. Somewhere where we're currently at, though, I think it's just kind of a crapshoot, and I think the euro's more or less just left to consolidate with this situation in Greece brewing, and with the outcome very uncertain. And what we'll do right now is let's just go ahead and delete everything and just redraw these major technical levels. Okay, so if you take the euro dollar, and you can see this is a daily chart, we're just going to start here. So with the daily chart, obviously really critical resistance comes through all here at 114 and change. It's really critical. Now, one thing that we did do this week is we broke through support, and we're consolidating below this broken trend line. Now, the other thing that my eye automatically goes to is I see all this support too, which is good, because now this suggests really where the breakdown point is in the euro for the near term. So as a daily trade, as an intraday trader, if I can look at the structure right here, I can tell you just by eyeballing this chart, I know exactly where the euro downside is going to start picking up steam. And if you don't see that, then let me take your eyes over to it. Right there, if we break through that low, okay, that's where anybody who's long right now, their stops are below yesterday's lows or 2 days ago's lows. There's no doubt, because if we break through this low here, there's going to trip all sorts of stops, because people are going to start to realize, oh, we're probably going to go back down to 110. In the event that happens, this is going to open a trap door right through here. Okay, but the question is, are we even going to get down there? With everything happening in Greece, and with us obviously coming to some sort of head, I doubt that we're going to see that trap door really fall, unless we get past today, and it seems like there's no progress being made between Syriza and the EU, and if there's no developments that come through today, and we head into tonight with still no deal on the table, that could open up the downside. But then the downside's probably limited to tomorrow, as negotiations pick up again. But if the meetings end today and there's nothing done in principle, yeah, we could theoretically break through that support. So what we'll do is we'll just mark up the lows here from 2 days ago. That was at 30, right? 111.35. That's support. That's key. 111.35. And I'm going to put an asterisk there. That's key support for now. Now resistance. Okay, so where is it that, oh my God, something's been done. Looks like we've agreed to agreement's been made. Fantastic. They're taking that to Athens for the weekend. Then they're going to debate. What happens here? Well, I think if we get above 112.35, that'll push us back up to here, to this trend line resistance right through here, right? Then we can start the recovery trade, probably taking us back up towards some sort of retracement. Now that comes in at 112.35. So if we break that 112.35, then I think we will be clear that it'll be clear that something's getting done. Something proactive is being done. Okay. All right. So for right now, we are in a range. Well, we've been in a range for quite some time, and we're in a range environment. So just respect it. Understand that that's what we're dealing with, and 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 so be it. Okay. Now um, let's go to the cable. So here's the cable. I think the pound actually is probably a decent short. Not right at this very moment in time, but if we get some dollar strength, the cable is going to be a. I didn't mean to do that, but that's okay. The cable is probably going to be a decent short, and if I wanted to trade a dollar pair, I think that the cable's the way to go. Really is. I don't see any benefit right now in trading the euro. I think the cable is probably where I'd like to. If I'm gonna take a dollar trade aside from the dollar yen, which and the dollar Canadian, I let me rephrase that. If because I'm long the dollar Canadian and I'm short the dollar yen. I should actually just be short the Canadian yen and be done with it. That's basically the trade I'm in is short the Canadian yen because I'm short the dollar yen and long the dollar Canadian. I'm basically short the Canadian yen is what I am doing, but I'm not short the Canadian yen, ironically. Anyway, with the cable, this would be I think a good trade to if you're like, oh, here comes some dollar strength, you could probably trade the pound instead of trading the euro. Okay, and right here, it's obviously clear resistance at the moment. Clear resistance. That spike low, that spike high is a 4-hour chart. The question is if we can get up there. I mean, if we can get up to 158, it'd probably be somewhat of a gift. I don't think we've even pushed the 38% retracement thus far of this move. I mean, 38% retracement still comes at 156.50. So uh, this is probably, you know, the way to trade the cable right now, you know, after closer inspection, since we happen to be mid-range, try trading the extreme ranges here. So let's say we get a rally to 158, probably a decent short. A move to 156, probably not a bad long. That looks like a decent setup for now. Okay. Right now we just happen to be in between. So 158, 156.50, trade the range. 156.50. Now also keep in mind we have a bigger, inverted head and shoulder pattern in the cable, right? Complex. It still has time to work. This red line right here, if you missed yesterday's analysis, this is basically the distance of the left shoulder. So we have some time to develop really the right shoulder if it's going to play out. I'm not a, I'm not a, the complex head and shoulder patterns, first of all, are not, head and shoulder patterns in general are not patterns I like to hang my hat on as it is. Um, and especially before we've even broken a neckline. So I've just left that there because that is still a possibility, but it's not. It's not a strong possibility at this point. Okay. Hold on. Let me grab a sip of my coffee real quick. Okay. Um, let's go. Where are we at? Okay, so that was the cable. Let's go take a look at the Swissy. So Jordan overnight, he basically said that the Swiss National Bank is ready to intervene if needed. Okay, the Swiss National Bank is it says that the Swiss franc is overvalued, and remember, if a deal, a can kicking deal gets done with Greece, which is the more likely outcome, I think that's most people's base case scenario at this point. If that happens, I want to be long this dollar Swiss. Now think about how this is going to work. Okay, if a deal gets done in Greece, what is going to happen? What is going to happen in the currency market initially? Initially, the euro should spike up. Greece pushes through parliament some sort of near-term deal that kicks the can down the road 6 months or a year, and then they're going to revisit these issues a year from now, and probably we'll have a new government in the meantime. But you don't want to. The first thing that's going to happen is the euro is going to spike up. We're going to see some dollar weakness, I suspect. Well, that dollar weakness is not going to be contained to just the euro dollar going up. The cable is probably going to bounce. The dollar yen is going to come down. The dollar Canadian come down. The Aussie, the Kiwi may go up. The dollar Swiss will probably go down too. At the moment of Greece kicking the can, and it's clear that we're now just pushing off the deal for 6 months to a year to 2 years, whatever the case is. Well, institutions are not going to want to be long the Swiss franc, but what will happen with the dollar Swiss is the dollar Swiss will probably come down quickly, abruptly, and at that point, I'm going to turn around and get long the dollar Swiss. So on any pullback of the dollar Swiss post-Greek agreement, any pullback in the dollar Swiss, I'm going to get long, because institutions and banks do not want to be long the Swiss franc, with a negative interest rate for any extended period of time. If they feel that Greece will not be in the headlines for the next 6 months or the next year, so be it. They don't want to be. They're not going to want to be long the Swiss franc. So I'll be looking to buy the dollar Swiss, buy the euro Swiss, buy the pound Swiss, short Swiss francs across the board. That's going to be the trade that I'm really looking at over the course of the next couple of days. You guys want to know where I think there's good opportunity? It's going to be buying those pairs. Okay. Now there's the what the most recent move we've seen with the dollar Swiss. So what we got to figure out is, where's some near-term resistance. Obviously, if the dollar Swiss continues to move higher, this previous support right here, right, that all comes into play at 94.70, which is also a 38% retracement. 94.75, that is resistance. Okay. I'm not even sure that that's really great resistance today. The euro's spiking up right now. Hold on. I don't know why the euro's spiking up, but anyway, regardless, the dollar Swiss, I mean, it looks like we could still really move higher here. I think. Okay. Support. Let's see where support for the dollar Swiss would be today. If you guys are bold enough to trade the dollar Swiss, I personally, I'm not that comfortable. The dollar Swiss is going to be just as prone to whipping around as the euro dollar is. So it's something that I'll stay away from until after a Greek deal has been made. Let's just assume that that high is in. 93 looks like about 93.40. 786 retracement, some trendline support. It's not great, but we are definitely in a range here. Let's go to the dollar yen. Now, I'm short the dollar yen. We had a nice rejection yesterday. Yesterday I was getting a little frustrated being short the dollar yen. I'm like, man, the Dow is down like 100 points or whatever, 100 more points. The Dow's down quite a bit, and the dollar yen had been going higher, and I'm like, this is frustrating, absolutely frustrating. What should happen? What should happen is that if the stock market continues to come down, the yen should start to strengthen, and it finally did. It finally buckled late in the day yesterday, and the dollar yen rolled over. Thank God, because I was getting a little frustrated there. Now, what the dollar yen is doing right now, you can see it pretty clearly here. We're finding some support. You see this broken trend line? Okay, get rid of this. That was the reversal candle we were looking at yesterday. The dollar yen is starting to find some support down here, and that support comes right through here. You can see that spike, spike, spike. Really key support today is 123.20. Now I think the dollar yen is actually coming right back down here to this major support. I am staying short. I'm short at 123.98 is my cost average right now, and I'm going to stay in that position. But 123.30 is support for now, for today. Now, if you're long the dollar yen, you have to imagine, okay, if we get a rally back here, back to 124, you're probably going to be pretty happy to get back out. If you happen to be long, because now you're starting to see a trend lower, and you're just like, probably want to pull that long off the table. So any move back up towards 124 is probably going to find some selling. Again, I'm just trying to put myself in the shoes of the other trader, the one on the other side of the trade from me. If he or she is long and I'm short, I'm in the driver's seat now. Being on the short side, I'm in the driver's seat. So whoever's long is going to be like, okay, if we can just get back up here, I just want to get out now. Okay. Let's go over the Canadian really quick. Here's the dollar Canadian. I am long the dollar Canadian. Now, yesterday I drew this for our traders. I said, hey, if we drop down to this, the 80 level, 123.80, I want to get long. I bought it at 90 as my cost average. 91 actually is my cost average. Now, what we've done is we drifted down to the 60 level. Now, remember the 65, if you don't understand why the 65 is so big, this is it right here. See that? That was the neckline from the double top. Double top, neckline, break, target reached, rallied back, resistance, resistance, resistance. Now that's acted as support. So that is at 123.60, roughly. Okay. We've been as low as 123.69. I mean, 123.60 is just it's been a big level for, I know we're really close. I'm just saying 123.60 has been a big level for the dollar Canadian for a while. Now, we haven't bounced here. So if you're asking, oh, Blake, is this a flag pattern? And like I said, I'm long. I'm long the dollar Canadian. I'm down right now 14 pips. I'm just sitting in it. Not, if you're going, well, Blake, is that a flag pattern? No, it's not a flag pattern. Why? The flag has exceeded more than 50% of the distance of the distance of the mast is the mast has exceeded 50% of the pole, so it's not a flag anymore. At least not on that hourly chart. But I still believe if we break through 124.20, it's going to be a big move. And maybe Paulie's correct. Maybe Paul Franco is correct here. Paul Franco said that crude oil is done. If crude oil is done, maybe the Canadian continues to weaken. So 124.25 is resistance. All right. Let's see if we can do the Kiwi really quick. All right, so here's the Kiwi. So we broke this downtrend line, I think. Oh, no, we haven't. Never mind. Whoop. Kiwi still looks like it's going to squeeze, frankly. Doesn't it? I think it does. So above 69 and a quarter, that should get us to 70 cents at least. I'm just going to I'm going to redraw this and do this. I still think this Kiwi's going to squeeze here. Okay. There's the downtrend line that's most important. All right. So if we can get above 69 and a quarter, should take us to 70 cents. So 0.6925, 0.7000, that's going to be an important resistance. We are in a range, or we're bearish, excuse me. Sorry. We're bearish, but we look like we can squeeze. So just, I think this is squeezable. Now, here's where, if you're, and I'm not trading the Kiwi. I am short the Kiwi, but through the Aussie New Zealand. But this is where you're wrong. If you're trading the Kiwi to the upside or the long side. If the Kiwi breaks back below 68, let's just call it at this point 68.80. That's when you're wrong. Come back down through here. Because this is where you go, oh man, that blue line is going to stick through here. Okay. All right. When I come back, we're going to do the Aussie dollar index, peso, Swedish krona, Norwegian krona. I'll be right back. Don't go anywhere. I'm going to go get some more coffee. Hi, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up with this Aussie and the dollar index and see if there's anything else before we have some of this news coming out. Let's see here. Looks like the euro is pulling back just a hair. Back on 112. Markets aren't really doing anything. Okay, let's go over the Aussie. Aussie's definitely contained right now. So yesterday we drew this, right? Hey, if it drops down to 79, 76.75, probably not a bad long, and if it rallies back up towards 77.85, it's probably a decent short, right? We drew that yesterday, right? 24 hours ago. Okay, so we got down to 76.84.3, somewhere around there, and then bounced. So that, worked according to plan. Now the question is, what the hell do you do today? Okay. I still think it's probably the same trading plan. Just it's going to give you another opportunity. Same thing. If drops down to 76, 75, you probably want to use that as an opportunity to be on the long side. If it rises to 78, 77, 85, you want to use it to get to the short side, and then that's it. Just kind of wait for the move. Trading it right here, a little dangerous. Down here, up there, probably a little bit better. So 76.80 support, 0.7680, and it's becoming more important support because we got this trend line that's now intersecting with it. See that? That trend line's now going to intersect with that support, and that becomes important. And then 77.85. And we're in a range. Okay, let's go over to the dollar index. Chop City. Resistance is still 95.70. Support is at probably the breakout point here, 94.50. Was it 95.70, right? 95. Yeah, 95.70. Okay. All right, and that's it. Let's go to, and we are in a range. Let me just take a real quick look at, see if there's any particular setup in the, here's the peso. I'm just going to eyeball it really quick. I mean, look, the peso is not backing off. If we get any type of dollar strength, the peso is probably going to be a nice long here. It really is. It's not backing off at all. We're approaching the 618, but it's really holding up quite well. Norwegian krona, it's a big deal. If we pop out of this channel, this is a big deal. It's just popping out of the channel is going to be key. If we have any dollar strength here, you have to keep an eye on the U.S. dollar, Norwegian krona, and the reason why is the key reason why on the U.S. dollar, Norwegian krona is because Norway is cutting rates. So Swedish krona, we tried to break the flag, and I think this got stalled up with the euro as well. So its flag pattern never played out, kind of nullified itself. And I don't think there's a whole lot to do with the Swedish krona at the moment. That the Swedish krona is going to move inversely to the it's going to move inversely to the euro. Hey, real quick, guys, I'm going to let you all know right now. I'm going to get out of my dollar Canadian. I took a 2-pip loss in the dollar Canadian. I kind of wanted out of, aside from the dollar yen, I want out of my trades. I just took a 2-pip loss. I don't want to be the only dollar trade I want right at the moment is short the dollar yen. That's it. At this moment, I think the dollar Canadian is just kind of range bound. I just don't want to deal with it. Okay. All right. Just letting you guys know. All right. So there's your bias chart. And you know what we should do is we should go look at the E-mini futures really quick. Let's go to ES. Here's the September contract. Very choppy. Look at this. Wait, hold on. Let's delete that. Delete that. Let's do this. 38% retracement. This is good. This is good. No? Yes. No. Yes. Is good. Is good. 20.99. 21.20. 21.22. 21.20. Just write down 21.20. Just approximate. 20.99. That's good. Das good. ES. Oops. ES. Support 20.99. Right? 21.20. For those of you that trade equities, I tried to do that for the benefit for a lot. I know a lot of traders like to trade the futures, so there you go.